It's the end of the day with Ray. Hello, my friends. I want to get back on that Sharp Interactive board, and I want to finish up my Ricoh presentation on their third quarter for FY ending March of 2023. Last week's episode went a little bit too long, so I want to break it up into two episodes. Here's that second episode. It starts out with a question. You can see that question on the Sharp Interactive board. Does Ricoh have the discipline to grow profitably? Does Ricoh have the discipline to grow profitably? I want to share some of my thoughts. I read an article in ENX magazine that kind of got me thinking about Ricoh a little bit more. And so without any further ado, let's jump on that Sharp board and see what I put together for you. So the first thing I want to do is talk about this article that I read in ENX magazine. We know that Ricoh recently had their dealers get together at Philadelphia. They were all excited, right? And Ricoh's on stage talking about all the things that are going on. The analysts were there taking their notes. And Eric Cagle wrote an article, and this was a paragraph out of that article. Let me read this paragraph, and then I'll continue with today's episode. Meanwhile, Ricoh's DocuWare document management software and workflow automation subsidiary enjoyed explosive growth to the tune of 215% year over year. The Eagles franchise, aside from being a Ricoh partner and customer, is a DocuWare client and a significant success story, having automated its accounts payable department. Ladies and gentlemen, that's fantastic, but I hate when these OEM leaders stand on stage and tell all the dealers they grew something 215%. If nobody knows what the starting number is, it's irrelevant. If DocuWare is such a huge success for Ricoh, why don't you share more details around it? I did a little research myself. Back in April of 2021, and keep in mind that DocuWare's FY ends in March, just like our OEM friends. And in April of 2021, this is what they said. DocuWare, provider of cloud solutions for document management and workflow automation, announces global revenues for the FY 2020 year ending March of 2021. The company achieved 62.2 million euros. 62.2 million euros. At today's Forex, that's $66.6 million. So it's safe to say by this article that when Ricoh bought DocuWare, it was a $66.6 million company. What did it grow? Could you imagine if those leaders from Ricoh there in Philadelphia stood on stage and they talked about DocuWare this way? I want to tell everybody something about DocuWare. We bought that company. They were doing $66.6 million in revenue. I'm excited to share with you today that they're doing $208 million. They're doing $300 million, $400 million, $100 million. Whatever the number is, share the reality. Even the Philadelphia Eagles are using DocuWare. And then share why DocuWare is so important for those dealer friends of mine to take that product on. But when you stand on stage and you throw out these arbitrary numbers of 215% and all this crazy nonsense, and nobody knows where you started, it's irrelevant. Why is it that the OEMs that talk the most about doing services outside of print, even though Ricoh goes back and forth on that conversation, but why is it they can't share the real details and teeth of these services? Ladies and gentlemen, I'm afraid for Ricoh. Ricoh gobbled up all these assets around print and they got rid of them all. And then they had these huge impairment charges. They had a pretty big impairment charge against Mindshift, the IT services company they bought. And here they are, they're out there buying up all these assets, but they're not sharing the details of those assets, and they really need to. And I realize that a lot of people aren't going to ask Ricoh these questions, but we have to. The dealer owners out there, you got to get your associations to help you with this. We got to get more information from these OEMs. The industry is changing drastically. We cannot continue to do what we've always done. We can't be so afraid to ask questions, to be a little bit tough, because someone's going to get all upset and think you're not their friend anymore. We need to all be friends, but we also all need to be realistic about where our future is. And if we're afraid to have these conversations, we're just going to fall off a cliff. And I know my dealer friends out there, they can't afford to make the wrong decision getting in bed with OEMs that are helping them sell services if they don't have the confidence that that OEM can actually produce operating profit and be around as an ongoing concern. I didn't mean to get that passionate. But could you imagine if the Ricoh leadership was that passionate about DocuWare and they could share the numbers like that? That would be exciting, wouldn't it? I would think so. Let's go to my next slide. I wanted to talk about this slide. This was in the presentation for Ricoh. And this is more about some of the stuff we tried to hide behind. And we throw out the big adjectives. Everything's great. We're doing fine. And then you start digging a little bit deeper and you realize there's some issues here that we have to be prepared for and understand. This slide represents Ricoh's cash flow, statement of cash flows. Free cash flow down year over year from higher inventories and PFU acquisition and other growth investments. First, I got to address this. Ricoh, do you honestly believe that Fujitsu scanner division is a growth option? Or did you just buy that because you saw an opportunity to clean that thing up, grab some additional profits out of it while you unwind it? I mean, what are you doing? Do you really believe that scanning is a growth business? And if you do, stand on stage and explain that with passion and excitement and share with the dealer how they're going to make money selling scanners and profit from that and how that's a long-term growth strategy. Share with the dealer community about these IT assets that you're buying up and all these companies, what their revenues were, what their revenues are now, and how you're going to help dealers deliver services. Because they need that information. And unfortunately, if they look at your statement of cash flows, they should have some concerns, right? The same period last year, 9 months in, you were 34.3 million positive in free cash flow, good cash flows. This time, this period, 727 million negative cash flow. If you factor in the positive from the last period of 34.3 million, that means you're 761 million worse in negative cash flow than you were a year ago, same time period. That's a little bit alarming. Now, if you're out there and you're making investments and these investments pay off, it's just an investment. You're a $15+ billion company. 727 million in negative cash flow isn't that big of a deal if you can get out of it. But not if you keep adding to it. Not if you can't prove to the world that what you're buying is actually going to help you grow your profit. I want to share this slide. Ricoh Digital Services, and in Ricoh Digital Services we have office print and office services. So just in a nutshell, remind everybody from last week's episode, that business, if you compared it to a year ago, grew $1.5 billion in both office services and office print. Okay, those two things combined grew $1.5 billion. But here's the problem. If you also look on this board, you'll find out that the 9 months we're into right now, the operating profit is 1.5%. A year ago, the 9 months in, we were at 1.6%. We grew our revenue by 1.5 billion growth, but we can't get operating profit. Growth at all cost isn't going to work. We've got to be able to drag profitability along with it, and we can't be happy with 1.5%. This slide here shows us in the globe where the growth came from in office services, because the 1.5 billion was for office print and office services in the digital services group. But let's look at office services. We had a $249 million growth in Europe. We had a $182 million growth in Americas. We had a $37.3 million growth in the domestic market of Japan. That's a total of $468.3 million growth of the $1.5 million growth overall. How much of that was acquired? How much of that is DocuWare as an example? Ricoh, you should be able to tell us those numbers and be proud of them so that your investors feel like, man, they buy these companies. They're buying up these companies that are 10 or 15 million, and they're turning those companies into 20 million. They're buying companies that had EBITDAs of 12 and 15%, and they're able to carry that and make profit. Because when you look at the overall profit of the company, you're thinking you're buying up a bunch of stuff and you're struggling putting it all together, and the cost to put it all together are killing you. Kind of like you did before. I'm predicting, without much needed change, to the lack of disciplines in managing profit, Ricoh will be doing another $1 to $2 billion impairment charge by the year 2028. And I hate to tell you that, Ricoh, But if something doesn't change, I truly believe you're just going to repeat what you repeated not too long ago. It hasn't even been a decade. And quite honestly, it's going to take the discipline. It's going to take strong leadership. It's going to be attention to detail. It's going to take the ability to understand the deliverable with perfection so that all those in the organization of Ricoh know exactly where Ricoh wants to go. And where Ricoh wants to go should be a place that's profitable, not a place built on revenue, but a place that's built on profit. So when Ricoh faces the challenges that it's going to face like all the rest of the OEMs in the marketplace, it has the ability to compensate for the challenges ahead. Just some things to think about, my friends, because we all know this: status quo is the killer of all that'll be invented. Don't get stuck in status quo, and I'll see you all tomorrow.